Hey guys, Kogan here, coming at you with another video about real estate investing. So today I want to talk about the real estate market and are we going to see a real estate correction in 2020? Obviously, you know about the situation with COVID-19, how it's had a massive impact just across the country in so many different ways. So many businesses have been shut down. Most people are working from home nowadays, and definitely its impact on the healthcare system is pretty significant, and just in general it's affecting everyone's day-to-day life. When it comes in regards to real estate, there's a few things we need to look at. So the first thing is that banks have now allowed people to defer mortgages for up to 6 months. What that means is that in terms of a correction in the real estate market, people are not going to default on their homes, right? If they can't pay their mortgage, usually it would go through the mortgage default process. And when we saw back in 2008 in America, one of the reasons the real estate market collapsed as much as it did was that people would walk away from their homes, right? They couldn't make their payments, they defaulted on the mortgage, and they walked away from the homes. And then you had all these foreclosures hitting the market at the same time. So right now in Canada, at least for the next 6 months, we're not going to see that, because if someone can't pay their mortgage, they're simply going to defer the mortgage. We're not going to see that first in the next 6 months. The government's also come out with different plans to help businesses keep paying their employees. Up to 75% of the pay is going to come now from the government, and those that do lose their incomes, even self-employed people, are going to get up to $2,000 a month for the next 4 months. So all these steps are going to reduce the amount of people that can't pay their mortgage, and it's going to help reduce the number of foreclosures that may happen as a result of something like this. The other part, like I mentioned in the last video, is that the Bank of Canada has also dropped interest rates. Having a low interest rate always helps the real estate market, because if someone's borrowing money to buy a home, it is a better time in terms of that. Now, before COVID-19 hit in 2020, between January and February, the demand in the real estate market from buyers was reaching almost all-time highs. We were seeing month-over-month price increases, bidding wars start to heat up, just prices going up in general, and it was a very active market with a lot of buyers and not as many listings. Now, things have changed in the last few weeks. Obviously, a lot of buyers are now scared. They're not ready to pull the trigger, and there are some sellers that are really looking to offload some of their properties. We're seeing actually quite a few student rentals hit the market where, because of the uncertainty of the school being in place, probably by next September it's going to be open, but we don't know, right? So many student rental landlords are actually selling their student rentals, and I'm seeing this in Welland near Niagara College. I've seen a couple of these around UTM, so we're starting to see some available supply, but nothing drastic enough to really see any major price reductions, just because it's kind of a stalemate on both sides. Buyers aren't really looking to buy, and sellers are just holding off, right? They're not really looking to sell their properties anytime, in a rush per se, because even if they don't have any income, they can just defer their mortgages. They're not forced to sell right now. What do I think that's going to happen? I do believe we're going to see some opportunities where people who are forced to sell due to circumstances outside of their control, where they need to sell, and they may need to sell quickly. There was a deal that I was working on where the seller wanted to sell quickly and was willing to accept quite a drastic price reduction simply because he actually found another good deal on a property that he wanted to buy. So he wanted to get rid of his current property quickly to buy the next one. We may see more of those happen. And definitely now is the time that if you are buying, you can actually negotiate more, because there's less buyers. So it is creating a more friendlier landscape to be a buyer, to be able to negotiate. Over the next year, 2 years, many people are saying that if we're not already in a recession, we will likely go into a recession. Just the number of businesses that will be impacted by it and the number of people that lose their jobs that may not be able to quickly recover is going to have some long-term impacts, that's for sure. But when it comes to the real estate market, there was already, especially in the GTA area here in Ontario, there was a shortage of homes, and there were more buyers than there were sellers even before this happened. Those buyers haven't gone anywhere. They're still here, right? They may have paused their search for a home in the short term, but over the next year and a half, I do believe that, once things calm down to a certain degree, if things calm down, people will start going back out there to purchase homes if they were planning on doing that anyways. And in the interim, personally, one of my plans is I'm in the middle of refinancing two of my rental properties. I'm going to actually, as soon as those refinances come through, I'm going to be actively looking to purchase my own next rental property, because what I'm seeing is an opportunity to get into a market where you can buy, a quality property without facing much competitors. Maybe you can get a little bit of a discount. And my thought process, and this is something that's been developed over the last couple of years in my investing, is that I simply don't know enough to time the real estate market. So when I have the funds available, if I can find a good cash flowing property, one that I'd be happy to own over the next 10 to 20 years, I'm personally going to do that. Even Warren Buffett, one of the greatest investors of all time, he doesn't try to time the real estate market. When he finds a good opportunity, a good company to buy, he'll do so. And then the price may go down the day after he buys. He's not selling, right? He's holding on to it for the next 10, 20, 30, 40 years. So that's the way that I want to look at my own real estate investing. Is the real estate market going to crash? In a sense, it already has, given that before you had to go into multiple offers and pay over asking, and now you can actually negotiate 10, 15, maybe even $20,000 off the list price in some cases. So that is technically a correction where you're getting it for a cheaper price. Nothing drastic like a real estate crash where prices drop 20, 30, 40%. That hasn't happened yet. Personally, I'm not counting on that happening. The reality, who knows? No one can really predict it. But the only scenarios that I see that happening is if banks really stop lending. If banks come out and say that, you are approved to buy a house by all other means, your income is sufficient, you still have a job that's paying you a good salary, and you can afford this home, but we're still not going to lend you that money to buy a property. I feel that's going to be the scenario where we do see a real estate correction, because if people can't borrow money to buy a house and all we're left is the price that people are willing to pay cash for a house, there's not a lot of people who can buy homes in cash. So that would be a significant correction, and that's what we saw in 2008 in the States. That was one of the reasons there was such a big real estate correction, was because banks stopped lending just outright. It wasn't the fact whether the buyer was qualified or not, they just stopped lending altogether for a certain time period, and that had a devastating impact on the market. I don't see that happening here as of right now, and this is in April of 2020. The reason I don't see that happening is that so far the government has actually done almost the opposite. They've reduced the reserve requirements for banks, how much assets they need to hold in order to lend out money. They've dropped interest rates. So they're doing almost everything they can in their power to push the banks to actually lend more than before and at cheaper rates. So we'll see how that plays out over the next couple of months. But I hope this was helpful. All the best.